Hello everybody, welcome to Ask a Fund Manager and Happy New Year to start 2021. In this video I'm going to be talking about Bitcoin and cryptocurrency as it's very popular right now and I've been asked a lot about it. Just up front, nothing in this video is investment advice, especially given the topic we're talking about. Please do your own investment research or hire an advisor before making any trading decisions. I also have no positions in cryptocurrency right now, on the long or the short side, as of my recording this, and I really have no plans on putting on any within the next few months, at least, if not ever. So, with that out of the way, let's get on to the topic. This here is the chart of Bitcoin. As you see, it's gone pretty much parabolic. In fact, if you look at it compared to 2017, it's at even a steeper trajectory as it was during that bubble in terms of the escalation in price. And as of Monday's trading, which is when I'm doing the recording this on January 4th, we had a massive down candle that went within 36 hours from 35,000 on Bitcoin to trading at 28. So which is always one of the risks of investing in cryptocurrencies. You had greater than a 20% move, but in nothing. And I mean, how can people consider something like this a store of value? It's not. Like, a store of value is something that has some sort of stability, and it may have volatility, but not the kind of volatility that you have regular drawdowns of 10, 15, 20% or more in less than a week. On a frequent, that occasionally happens in stock markets, but stock markets are not regarded as stores of value. They are speculative investments or long-term income solutions because they're shares of a company. There's an inherent risk or beta in taking a stock, whereas a currency or something that's a store of value is not that same kind of perceived risk. Like, short of like a political crisis that causes like an emerging market currency to blow up, you don't really see that very often. I mean, the only time I've really seen it in the last 30 years in the developed markets is when the Swiss franc strengthened 20% due to removal of a peg. But again, that's a special situation. There's no pegs that were unsustainable attached to Bitcoin. So now that, since I do not really believe it's a store of value, and also given its volatility and the fact that people are hoarding it as a speculative asset, it's not really being used as transactions either. Like, if I'm a vendor and I'm trying to sell a product for $20 worth in Bitcoin, unless if I can flip it right away, it's really hard for me, or I'm a true believer in Bitcoin, it's really hard for me to accept payment in Bitcoin without being afraid that my $20 payment is going to be a $15 payment tomorrow. And because of that, how am I supposed to estimate my margin on that product? How am I supposed to use something like that as a viable currency? So with that, I think what the real role of Bitcoin is, and I think it will continue to do this to a certain degree until either A, the animal spirits just completely reverse the other way, or B, you start to see a rise in real interest rates, which make speculation not as attractive as it used to be, is that it's the perfect speculative asset because there is no earnings like a stock that can put in check the amount of people can bid up the thing. There's no storage costs like conventional commodities, and unlike fixed income instruments, there's no expected yield or return. Like, a bond really can realistically maybe go as high as a yield that's -0 to a -1% maybe at the most, which therefore puts a cap on the price of the bond. Well, since there are no yield expectations on Bitcoin, there really is no cap. I mean, it's the ultimate beta. It's like, if you just want to bet on just pure emotional buying on something and just bet on just a proxy for pure speculation and beta, Bitcoin is the way to do that, and cryptocurrency in general. In terms of longer term investment, I don't really think that's the case. I mean, I mentioned some of the flaws of it being a unit of account, a store of value for a currency, but the other real main flaw I see in a lot of the cryptocurrency space is the fact that the altcoins have value. This is Litecoin. Litecoin has had a rally as furious as Bitcoin. And if you look at the Bitcoin, and people say, oh yeah, it's just everybody's kind of going with the ride. And so therefore, it's not really comparable to Bitcoin. But if you look at the Litecoin to Bitcoin ratio since Bitcoin really started taking off in November, it's actually rallied. That's the chart on the bottom right. If the altcoins, most of the other altcoins are actually lagging Bitcoin's performance. But the fact that the altcoins even have any sort of value whatsoever kind of discredits, I think, the scarcity argument. The main reason for that is that if Bitcoin, there's only 21 million Bitcoin, and because of that, if you only have 21 million Bitcoin, but there's more and more demand for it, and there's a cap in mining, therefore you have only therefore fixed supply, and so therefore if people want it, it's just the price is going to have to go up. And they'll say, oh, but the thing is that the flaw in this is that you can just create another cryptocurrency. It's not like there's any unique intellectual property. It's really just a first mover and a marketing and attention advantage that Bitcoin has. Because Litecoin has some of the similar technology to Bitcoin. In fact, I'm arguing it would be better. I mean, I'm not an expert in the different value in each one of the cryptos in terms of technical perspective, but their white papers are published and they can be replicated. And if the Bitcoin does have its first mover advantage, but with the right branding and marketing effort, it may just be horribly too expensive to be worth creating that competitive coin to Bitcoin in that way, in terms of just ad spend or whatever you'd have to do to educate or promote your coin relative to what the going standard is. Then as a result, if any of these altcoins have value, then really none of the cryptocurrencies have value, because that just discredits the supply. So if somebody can create a coin and therefore it has some sort of value and people will bid it, what's to stop people from just saturating the market like they did in 2017? And there really isn't. I mean, I think there's potential with blockchain and digital currency technology if it is collateralized something. Like, I like the idea of having, like, buying like an empty plot of land somewhere and dividing each square inch into a different coin. And therefore you have a cryptocurrency backed by a piece of land in a country with good property rights. That would be something I could get behind, because there actually is a fixed collateral. It's a square inch of land that currency represents. Same, you could do it with a vault of gold somewhere, that each coin is worth a certain ounce in gold. Or you can even do it with, it's an alternative way for shares of a company. But the point is that Bitcoin is really just a fiat currency without a government. And there are other issues in terms of like political issues, especially dealing with the Chinese government, that could hurt the currency. But my main argument against it from an investment perspective is really just the idea that the scarcity and the long-term value proposition is missing in terms of lack of collateral, and the fact that you can replicate it partially and it will have some sort of value perceived to it by the market. That's my take on cryptocurrency, really. I think you can trade it profitably, mostly on the long side. I don't recommend shorting it, because a lot of the action happens to be on the weekend, and the way you short these things is through the futures market, and if you get these massive gap ups that can wipe out your account. It's not a very good risk reward. And alongside, you just have to use, since there really is no fundamentals. I mean, some people compare like the total market cap of gold or the total market cap of a certain currency, and or the total amount of transactions, and they use that as a way to define intrinsic value. But I think it's quite suspect, and not really it's not really a way to compare to anything. Just because one market's a certain size doesn't mean the other one has to be that size. And so, because you have that lack of intrinsic value, the only way to trade Bitcoin and cryptocurrency is through technical analysis and charting. And if I just look at these charts, the cryptocurrency, especially Bitcoin, which has a more stable pattern at $2,000 increments of supports and resistances, you can trade it profitably just by going in and out and swing trading based on chart patterns. But there's a difference between making money swing trading something on chart patterns and expecting it to go to $1 million just because you think that you don't like the Fed. And it's actually made me question a lot of the arguments of precious metals, but I've talked about that on a different video. So you could feel free to watch that if you want to know more of my thoughts on what cryptocurrency investing means for other asset classes, particularly metals. That's really all I have to say on this video. Thank you for watching. If you have any questions, you can email me at askafundmanager@gmail.com, or you could comment on this video. I mean, the people who are crypto fans are probably going to hate this and give me thumbs down, but I just wanted to offer my perspective on this because I've been asked about it a lot. And good luck out there, whether you're trading crypto or stock market. But if you are a longer time holder and you've made a lot of money on this, I congratulate you. You just got to, I think it might be time to take some profits. Have a good rest of your week trading. Good luck out there.